What is up, guys? Welcome back to the channel. So we've had an absolutely wild past few days, and the chart that you see on the screen right now is the Bitcoin chart, and it's being compared to a bunch of different charts, including the S&P 500, First Republic Bank, Credit Suisse, Charles Schwab, JP Morgan, Bank of America, and HSBC. And what we can see is that against the S&P and all the bank stocks, Bitcoin is going in an upward direction over the past few days, as everything else is in a downward direction. So the be your own bank narrative seems to be a pretty powerful narrative for Bitcoin, at least in the short term. And it's pretty amazing to see that Bitcoin is right now at least getting a temporary decoupling. The question is, are we gonna see more decoupling, and how long is it gonna last? Well, that's something that we're gonna have to wait to see. On May 13th, just a couple days ago, I released this video on Twitter called 2023 Bank Run, The Rise of Bitcoin. And the post was viewed 776,000 times on Twitter, and it was viewed 240,000 times on Reddit. So I just want to thank the entire community for, showing all the love, the comments, the likes, the retweets. By far, this is probably my most viral video ever. This video was shared by Tim Pool from Timcast IRL. It was shared by Max Kaiser and a few other people. I posted on 3 platforms, Twitter, Reddit, and YouTube. And the only place that it didn't get significant attention was YouTube. So I don't know what it is with the YouTube algorithm, but guys, definitely follow me on Twitter because there's gonna be more content like this coming soon. I'll leave the link in the description below so you can watch this video if you haven't already. So since the banking crisis began, Bitcoin has sort of broken away from the traditional markets, which is pretty cool to see. Now, you guys know that I've been very strong about my opinion that Bitcoin is correlated to the stock market, and that is generally always the case. Though this event changed that, at least temporarily. And this is something that I look at all the time, the correlation between Bitcoin and traditional markets. And I'll be the first one to tell you if there is a decoupling. And what we see right now is that it's only temporary because it's only been a couple days or 3 or 4 days of decoupling. So this is not something that you can, come to a full conclusion of right now and just say Bitcoin's, on its own now. The Fed's decisions will affect the price of Bitcoin, and what happens with the banks will affect the price of Bitcoin. So it's something that we kind of have to wait to see. Now, looking at Bitcoin on the daily chart, what we can see is that the price is still sitting very close to the 9-month high. So in August, we saw the price come up towards 25,000. Then we saw the price come up towards 25,000 in February, and Bitcoin actually had a little bit of over exuberance and we saw a big wick there. Within just a matter of 4 days or so, the price went from 19,500 to 26,300, and it was just happening a little too quickly. So what I see is that the daily MACD has crossed up for Bitcoin. So if you're looking at Bitcoin's chart from June of 2022, what's being shown here now is a low, a lower low, and a higher low now. So this is, now looking at the weekly, this is potentially an inverse head and shoulders pattern. So a regular inverse head and shoulders pattern indicates a decrease in momentum. And so the reverse inverse head and shoulders pattern indicates a decrease in momentum for the bears and an increase in momentum for the bulls. Pretty straightforward. And now we're just waiting to see if Bitcoin is going to in fact continue the breakout up, or if we do get rejected back down. If we do see this weekly inverse head and shoulders breakout occur, one of the major price levels back, if you look left in history, is sitting in between 28,800 and 30,000. This cluster of support right there. If we do break out, looking at the weekly time frame, doesn't seem like we're all that far away from hitting something like 28,800, but it does kind of depend on how much the banking failure narrative drives Bitcoin and how much correlation Bitcoin has to the stock market moving forward. We just have a temporary decoupling. And I would love if Bitcoin did break away from the markets for some, for a lengthier period of time, but I'm not going to necessarily bank on it. But looking at the daily chart, what I see is that we had some over exuberance and a rejection wick, but in terms of the previous resistance here, we haven't seen all that much rejection yet. So this run could continue. So on the 30-minute chart, the low time frames, which shows the entire run thus far, Bitcoin needs to hold 24,000. 24,000 is the uppermost support of our structure. And if we do break below 24,000, that's going to probably send us down towards 22,775, the lower support, the previous high here, which is an expected support zone, because this area, there's really not much support. The price kind of just cut through that zone. So there's really nothing stopping the price here. We got to hold 24,000 if we want to, see some more continued movement up. If we break below 24, we could, get set back for quite some time and see the price consolidate near the 22,700 level. So far, Bitcoin has held the 24,000 zone. Going back to the daily chart, inverse head and shoulders, we have a pretty decent narrative right now for Bitcoin, I would say. And we've had a lot of momentum up, and we have that daily MACD cross up. So we are building positive momentum right near resistance. And if we see continuation, there could be a further breakout. I would not be surprised by that. But again, a break below 24 would likely send us to 22,700. But I'm excited to see if we get continuation on this temporary decoupling. If it ends up lasting longer, we will see what happens with the banks. If there's further failures, Credit Suisse, all this stuff going on. And guys, definitely check out this video if you haven't already. You're probably gonna really like it. I'll see you all in the next one.